Welcome back to Prezco. I'm the Business Prez. This is the Daily Trend. Let's jump straight into the market. Some juicy details. Whoops, wrong one. There we go. Let's drink me. Talk about some important stuff. Alright, just going to analyze the Bitcoin. We're going to analyze some Ethereum. We're going to analyze the macro. So the daily trend is on the daily chart. Whoops. And what can we see now after that capitulation? We've come down, we've made a massive buying wick, and we've kind of held with inside this range. So nothing is for sure until we kind of break out of this level here. And obviously where this level is key previous historic support. So, what are the indicators telling us it's likely to happen next? Well, let's have a look. Why have we got so many on there? Because they're on the 4 hour, right? So on the MACD, I've been working on this thing. Looks like a bunch of squiggly lines, but it makes sense to me. And essentially what it is the period of a bullish trend, a bearish trend, and the cool-off phase between bullish and bearish. So if you're bullish, you peak out, you cool off. Then you come back down and find support. If you break support, it enters the bearish phase until it bottoms out and cools off up to resistance again. And then if resistance is broken, we go back into a bearish phase. So I've got it here on the daily time frame. And then we get to zoom in on the 4 hour time frame. So as you can see, right here, it's where we started to hit bearish. Alright? The first one we get is a cool off. Okay? We've had our bullish run because we had a cool off here and then we broke out. So from here, on the RSI, we break above the 50, we tag green. Very important. That means our bias is bullish. On the next pullback, we buy it. Okay? So what happens is we top out here, roughly here, and then what happens, we print a double top. We break the neckline, we come back to retest it, and then we come down. Okay? So that's how divergence plays out, and we can see that on the MACD. Okay? Confirmed again by there. And then what happens is we cool off. Now we've tagged green, so we're in our buy zone now, because we're back in that band. We print a divergence compared to price. The MACD crosses up, signaling we're going through a bullish phase. And then, if we get in like a robot, we get in as soon as that gives us the confirmation, we get a good 30% pump. Until the point that we cool off. Now when we cool off, it doesn't mean get out straight away. But it could. If you get in straight away, you get out straight away, you're making 40%. But when we cool off, we actually make a higher high. Now this is a bull trap because we break out and then we fake out, come straight back down. And then what do we get? We get the bearish cross on the MACD. Okay, we've got our cool off and then another one signals bears. Bears are involved. And what happens is we sustain this the whole way down, we come to our midline, we get another down cross all the way down here. Okay, and then we pull up to support and then we get another down cross. Now I will go into this more in depth in the trading strategies channel of the Discord. We get to break it down so you guys can use it too. But essentially, I'm showing you guys how powerful this is. Okay, so then we come down and it starts all over again. We cool off we enter the bearish phase, and then we break down again. Now we get to zoom into the 4 hour and see what it's like, but a little bit faster. Okay, so you get that big bear cross, okay, on the daily time frame. It's there. Okay, it's this red engulfing candle right here. So what is that like on the 4 hour? That was the day that we broke down. This accumulation of 4 hour candles make up the daily candle. As you can see, we're under the moving averages. We're pretty neutral on the momentum indicators until we print this bearish engulfing, and we're clearly bearish from there. Okay, got it marked out on the indicators, a secondary red tag to send us into the negative territory. Okay, what happens is we come down, we tag red, we get a bullish divergence. Look at the difference between tops and bottoms here. Okay, now we've cooled off and we get a cross up, which means we are likely to receive a counter trend trade, right? So wherever you get in, it's still 5 to 10%, which is pretty good. So we pull back to support, right? Now the support in the bearish case is resistance. This is 50 moving average. We pull back to that support. Now right here is where I'm saying we're likely to go lower because we get the red cross. But what happens is we found this low. That low is supporting us. It's actually flipping us bullish. Okay, this was a very small bearish trend. 3%, not a huge move, especially in the macro theme of things. So, if we can hold above the 50, say we top out here, we pull back, what will that mean is we're up, we pull back, okay? Up, we pull back. And then if we can hold support, we're going to start trending up. If we can do that, that's great. What that will mean on the daily time frame, we've already got it. We're cooling off. But then we can come up to resistance, which is this previous line here, this area. Okay, roughly from there to there, right? 50 moving averages there. That's where I would expect to go. And from here, it's quite a large move. Okay, it's 15%. So on the daily time frame, we've been bearish and now we're cooling down. On the 4 hour time frame, we're cooling down, we may even flip positive. And with this kind of candle, if that closes and we break above that 50, this could signal quite a decent pump in the market. Now it looks kind of similar for Ethereum. Okay, looks even better for Ethereum because kind of forming bullish falling wedge, which is a good pattern to be in. So it breaks up and going to the top, which is nearly 10%, which is great. But we can see the same thing, okay? On the indicators, we are bearish. Okay, we've held under the 50, so we're in a slight downtrend, and as soon as we break out of this band, we're in a bigger downtrend. Okay, that should have been the cooling off phase. So between the green stick and the blue stick, we have our trade, we have our bullish trade. Okay, we look for longs, even if we get in straight away. We follow the trend, we're making higher highs, higher lows, we're breaking resistance, we're holding support until we start to double top here. Okay, this second high on the RSI does not beat the first high. What happens? The MACD starts to shrink, we come down, we cool off. So if you're watching this, it's a 30% move or 20% move at minimum. Okay, bullish to neutral, bullish to cool off. It's a decent trade, right? And then we're looking for our next thing. Do we pull back to support? And if we were bullish, we're going bullish continuation, this whole level would hold. and we push up, and that will be a bull market. However, we did not. We pushed down into a bear market. And we broke all kinds of support down here, which is why this green box is now orange. So if we beat this formation, we're coming up to resistance. And then our ultimate resistance will be that 50 moving average. So what's about to happen on the daily time frame for ETH is we're about to cool off. So the shorters, the bearish trend guys, if you got in here and you played it to here, that's a 30% move. That's huge. Okay, so you can go and buy a bit, you can short. Buy a bit, you can short. Okay, you make money going up or down. And that's what a lot of people are doing. So that's Bitcoin, the leader of the market. Now, just because we look bullish here doesn't mean we're going to continue bullish. We'll very much get rejected at these levels and start to come down. Okay? It can easily happen. Especially on the 1 hour, we can kind of overextend a bit, become oversold traditionally, and then fall down from there. Okay? But this is the swing within the swing within the swing. All right, we're looking at the daily time frame for setups. We've got bullish divergence. This is likely to break up. Support is likely to hold. We're on a key level. So over the next few days, how much do we cool off? Do we cool off all the way to neutral? On the 4 hour, we'd have a small bull trend. Okay, this pattern, whether it's a double bottom, a head and shoulders, this pattern, measured move, okay, from here to the neckline breakout, will send us right to that resistance level. And where's that? We're going to meet the 50. Okay, so we're not going to break all-time highs anytime soon, but we're bearish in a counter trend bull phase. Okay, now looking at the US dollar, this is Tether, this is the stable coin for the market. Not blue there, not blue down there. Okay, we're in this bull phase. It's in the 4 hour, that's why. We can stay on the 4 hour because it's pretty relevant. Okay, so we had this bearish phase down here. We broke out, retest, and we've been bullish ever since this level, 22nd of April. The start of April 22, and we've just been bullish, and now kind of top out here, cool off phase. There's cool off phase, bull flags, and then I was telling the Discord that hey, we're back on support. I think the support's going to hold. And it held, broke up. Now at this stage I'm thinking, alright, we're going to continue bullish for the dollar, which means crypto is going to bleed out. But we're going to come into this resistance zone after printing this bearish divergence. We're not likely going to beat these highs, and on the daily time frame, probably going to top out. And what happens is we started to get oversold, and then we're actually breaking down back to the lows. So we've got this little trend line on the RSI. If we hold these lows and push up, and the dollar pair, it's going to be bullish, and cryptos are going to be bearish. However, we've broken this trend line. The moving average is now flipped from bearish to bearish after divergence. So we're on the midline. We could swing either way. If we swing low, if we swing bearish, we're going to come down a fair bit. And this is going to cool off the overextended dollar and give cryptos a good run back to that resistance that we were talking about for Bitcoin. Okay. Now the dollar index for the world reserve currency, as you can see this play out on the daily time frame, right? We're bullish, cooled off, all right, we're bullish, and this uptick. Okay, it could have been on the 4 hour looking. All right, we're cooling off, we're coming to support, bullish engulfing, bang. All right, I'm in the trade. Then this is your confirmation, and then we come up, then we peak out, we come back down, find support on the previous top, we break out of resistance, we pull back, we put in a higher low, continue the bearish trend. The bullish trend. You're saying bearish so much for cryptos, but this is the dollar. All right, but now we're getting that bearish divergence. Okay, and this was looking to be a bull flag yesterday, but we broke down. Now we're retesting it, and now we're pointing to cooling off. All right, this doesn't mean we're bearish, it means we're cooling off. So this support could hold. This support could hold, and if it doesn't, then this support could hold. And that will bring the indicators down, bring momentum down to zero on the MACD. However, we're pretty close on the 50 to the RSI. So this could very well top out here. If we zoom in a bit, might be able to see that take place already. Okay, so bearish divergence between one top and the next. Okay, even on the 4 hour, we've got bearish divergence here between these two, which says, right, we've got to cool down. All right, we're going to cool down here. Cool down signal right here. So we're going to cool down, we're going to go find some support. What happened? We found support right here. We bounced, we crossed back up. Okay, so we're back in. Now this is like a morning star. Bang. We break out of resistance. The next pullback, we're getting in. All right, we can see that on the RSI. We dropped in, back above the 50. We held it, we go up. Okay, and we've got our confirmation. But then we top out. We're in cooling off phase again. We've barely broken the highs. We're in cooling off phase again. We actually come down. All right, we break the 50 here on the RSI, and we're retesting it bearish. Okay, now what does that look like on the moving averages? They've flipped. We've done a bearish cross, and right here, this structure is now resistance. So I'm pretty sure we're going to get rejected, start making a lower highs and lower lows, or a bearish trend on the dollar. If that happens, crypto's going to go skits. Okay? This is more like sideways until we start to break a few more supports, turning it into resistance. Because you see, Bitcoin is the polar opposite. We're all the way down here, but we're cooling off and coming back. Okay? Now what else I see on the short term is this trend line got broken and is now getting retested. Okay? Let's have a look at some altcoins. Oh, bit of macro there. So it looks like double bottoms. Looks like double bottoms. However, this 1, 2, 3 tested trend line broke down and retested the horizontal line, and now we're making lower highs and lower lows. And we're in the bearish phase. And this is on the 1 hour chart. So unless we actually cross up here and push up above the 50, we're not breaking any resistances. Okay, harmony on the 15, because I'm trying it out on all time frames. Okay, so it looked good, but we're now getting rejected by this area. Okay, we're now topping out, and if we top out and push down, it's going to be very bearish. Okay, and we're still under that 50 on the 4 hour. We're still under the 50s on the momentums. So even though it looked super bullish, zooming of that far in, here's where we broke out, retested. Do we get continuation, or are we going to roll over? That's the thing. That's what it tells us on the short term. And on the long term, hey, we're just cooling off. We're just cooling off. So if we do rally, it's probably not going to amount to much. Take your profits. Okay, this is another one in Algorand. There's our top structure, our triple top, 1, 2, 3. We even got a double top with bearish divergence. We broke the 50, retested it, and now we're in bearish mode. Okay, so what I'm seeing is actually a retest of this broken support, which could lead to another move down, which could lead to these levels here. Okay, and from there, we'll do the study all over again. What does the daily say? Does the daily say we're now bearish because we just broke, we extended this open more, or is it crossing and becoming neutral? In which case, if it's going to be neutral, the lows are likely to hold and we're likely to push up, even a little bit back to resistance. So a short from here would look like a 10 to 15% trade, and then long from the bottom would look like a 10 to 15% trade again. So the swings are very lucrative. This is the main one. This is V-chain, right? So we had this massive downtrend. Okay, we pulled back pretty high. We made a higher low. That's the first sign of a reversal. Then we break out. Okay, we make new highs, and this now kind of becomes our resistance. Okay, we make a higher low. Okay, so this is now our support. And what do? We're making a trend line. Okay, we're coming up. We broke it. We followed it all the way up to resistance. And then we broke another one, followed it up. We did not get higher than resistance. In fact, we didn't even make resistance. And then we broke another one. And what's happening now is we're retesting it. We're actually rejecting the retest, which signals to me that we're making lower lows. And after this one, sorry, let me say that again. It's telling me that we're making lower highs, and after this support, we're making lower lows. That is a red flag. So, it could go either way here. We have been going sideways for a long time, but it's building up, and the next move is likely to be pretty big. Okay? If we move to the bearish, it's 10 to 25%. And that's if we don't break lows. We can still break the lows and continue to wash down. Okay? Especially if this is just going to be a bear flag, then we can take this measured move here to there, and we're actually going down off fairway. Okay? Nearly to pre-COVID days. If we're looking at it, there's one support, there's two supports. So we could end up back in this range, or we could go sideways from here because this previous top broke out, retested it as a bottom. So this is a proven structure right here. Proven structure right here. So where we are now, looking at the macro, is even more likely to hold because we've been here before. All right, up until this point, it's kind of unknown. You haven't really been here for the longest time. I mean, it's been a year, but look, we broke out, retested, broke out, retested, and we went up, we come down, we're making lower highs. Sorry, this is consolidation. This actually looks like Elliott wave. I know this video is going for a while, kind of packing it all in. I'll make some breakdown videos. So everyone can learn and then follow said strategy to be able to make better informed decisions in the market. So we could be done here. We could be done here. Okay? But nothing is guaranteed. All we can really do is follow the trend, because the trend is your friend. So if we break down, we are reversing the entire macro of the bull market, which is why I'm here in the first place, because we're not done. This is supposed to break to the upside. So in actual fact, we're on ultimate levels of support. And this wave too, when it breaks out, we could easily go to the top. Okay, we could easily go to the top. Retest previous all-time highs. Take it off the log structure. Excuse me. It's kind of the same thing. This looks better on log. Okay, so that's the COVID dip. Doubt we're going to go that low. It's the structure. That's probably the lowest we can go. We can come a little bit lower, definitely. But we're at pretty good support levels right now. Okay, so if things turn around, I won't be surprised. But I won't be fully in until we're above the 50s on the daily time frame. That's when I'm in on spot. Okay, and not just above the 50s, but like we've kind of broken out and retested it, like here, broke out, retest, except we didn't beat resistance there. So it's kind of a good swing trade. And if we were to break resistance, it'd be a great hodl. But if not, then we kind of get out, readjust our portfolios to lessen the risk, to mitigate the risk of this happening. Alright, so guys, I've blabbed on far enough. My bad. It's a lot to digest at once. Essentially, we could go up, we could go down, we could go sideways. On the long-term time frame, on the daily, we've been going down, now we're going sideways. And on the shorter-term time frames, in the 4-hour, we've been going sideways, and we're about ready for our next swing. Okay, so thank you very much. I'm the Business Prez. I'll get better at these videos because I've been working on the strategy. Very happy with the strategy. Works on all time frames. Working on different strategies for portfolio management. I've got an accumulation strategy, which is hand in hand with the daily trend. I've got a swing trading strategy, and I've got a day trading strategy. And they're pretty much the same thing, just on different time frames and different kind of priorities to them. If you have a big trading account and you're in the day trading time frame, like the 1 hour and the 15 minutes, using very small amounts. If you're on the swing trading, you're using a bigger amount. But on the day trading, on the daily trend strategy, with your accumulation, this is your investments. And this is where we want to take advantage of the growth and then the decline. Be in during the growth, and when it's cool-off phase, go back to 50-50. That way, when we're coming down, we're only losing half as much as the market would. And then when we find support, we're back in. If we go up, then great, we can take advantage of that. But if we start to go down, then hey, we readjust. Okay? And these are things I'm putting in my Discord. Link in the description below. Guys, thanks everyone for watching. I can talk like a machine, I know, but it's all substance at the end of the day. Thank you very much. Smash that like button. I'll see you in the next one. Bye!